Thanks for joining us this evening. Inflation has fallen to a record low of less than 0.5%, 0.44% to be precise, as against 2.43% in the previous week. This sharp drop has been triggered by a fall in prices of primary articles and petroleum products. On What's Hot Tonight, we ask, are we headed towards deflation? Joining us, S&P's Shubir Gokran, who's the chief economist of the Asia-Pac region. Also with us is Lata Venkatesh. Shubir, let me begin by asking you, are we headed towards a deflationary environment, or is this number a statistical quirk?
Well, I think it's a number that reflects the very, very significant decline in prices of energy and several commodities over the last 1 year. Remember, this is a year-on-year number. And as a result of that, the costs of production of many manufactured items, many primary articles have also come down compared to what they were last year. So the combined effect of this is to bring the value of the index to a level which is barely just barely above what it was last year. Of course, in between we had a lot of rising, and over the next few weeks we should expect this number to actually go into negative territory as the cumulative effects of all these commodity price declines flow through the system. But I think we have to be clear on what deflation actually means and why it's significant from a macroeconomic perspective. Let me give you a very brief description of the process. Deflation is a problem when people perceive prices to be falling at a rate which makes sense for them to postpone consumption, to postpone buying decisions. So if they see prices falling week on week, they say, well, let's wait for a bit, let's wait for a week, let prices come down, we'll buy then. And if enough people postpone buying decisions, that impacts on production decisions, that impacts on inventory accumulation, and that sets in motion a negative production spiral. So that's the fear that people have. The second process, again, very briefly, that companies find the price of their products falling, but they're not able to bring their costs down because they have tied themselves into labor contracts and so on, wage contracts, which they cannot change overnight. So as prices of products fall, margins tend to shrink, and that puts companies under pressure. That is another negative aspect of deflation. I don't think with this number, or even the numbers that are going to come over the next few weeks, which may be in negative territory year on year, we are actually in that situation. So while statistically or technically it is correct to say it is deflation, I don't think the macroeconomic consequences of deflation as we know them are really on the table in this situation.
Lata, I'm just going to come to you in just a bit. Let's just hear what policymakers are saying. In fact, they're also quite debunking this deflation theory.
Inflation is not an issue now at all. For the next 2-3 months.
What I understand is that there's been a very strong base effect this week, primarily because the rate of inflation was quite high in the corresponding week last year. So probably this is more indicative of the base effect than any price effect as such. Cement, steel, infrastructure, all these areas are picking up. So I do not see any signs of inflation. I don't think you can read, any signs of deflation. I don't think you can read deflation into these figures.
That's your quick reaction in terms of the point that he made about demand picking up in certain areas. And that seems to have given the government some respite.
Well, demand picking up debunks the deflation theory quite clearly. As Shubir was pointing out, this is not really a demand-led fall in prices. This is really a base effect, and the fact that global commodity prices have fallen, that has led to this kind of a fall in the inflation level. Only when we see such a sustained fall in prices, there's no demand for cars, there's therefore no demand for steel, and therefore, manufacturers are forced to cut their prices very seriously. Would you really worry about a deflation? When did you last hear any car maker cutting prices? If anything, I think Maruti raised prices by just a wee bit. If at all any prices were cut, it was because excise duty cuts were passed on. So until that happens, deflation is a word we shouldn't use at all.
Shubir, the other point is about CPI versus WPI, and this is an aspect that we were talking about as well just a short while ago. The CPI does not come down. The WPI that we keep watching keeps sliding, and food price inflation is still high. How do you reconcile the both?
Well, actually, one is that the CPI is 1 month behind the WPI. The WPI comes out every week, with a 2-week lag. The CPI comes out once a month with a 1 or 2 month lag. And so the CPI number that we see actually reflects price conditions in January. We had a number of disruptions in January. I suppose there were some crops that were disrupted, but I remember that onion prices were particularly elevated in January. and we had the transport strike and so on. So these are disruptions that have driven food prices up, and we're already now capturing the effect of these disruptions in the index. Of course, the WPI food price numbers are also a little bit high, 5.5% from what Lata mentioned just a few minutes ago. And that suggests that the supply disruptions are still in play, but not that significant. Now, from a consumer perspective, if you're looking at deflation from the buying decision viewpoint, which is a consumer saying, look, I'll wait till next month to buy or next week to buy because I know prices are going down, obviously the CPI becomes a more relevant measure. And if you're not seeing CPI prices or the CPI levels going down into negative inflation rates, obviously that process cannot be initiated. People are still saying, look, I'd rather buy today than tomorrow because I think that prices may still go up tomorrow.
Right. From a point of view of the policymaker, Lata, do we expect now, is it a given now that the RBI will act?
Well, I don't think the RBI will act anytime soon now because they've done enough in terms of signaling a fall in rates. And that exactly is the point, you know. We are touting this huge sub 1% inflation number. But what does it mean for you and me? In the first place, I don't think the government or the political parties can go and tout and say that prices have fallen, because for the large masses, the food prices really have not fallen. They've just about, probably by the time elections come in, stabilized at a particular level. The other thing is that RBI signals are not getting taken because banks are sitting on high cost deposits. But those deposits will come off, they will get redeemed, and banks will be able to pass on lower interest costs to their customers, especially when they see inflation falling. You know, they get the signal that RBI will continue to keep the pressure down. The macroeconomic forces are going to continue to keep interest rate pressures down, so they will be emboldened to cut. That is the only positive we can get from this extraordinary number of sub 1%, that in the days to come, you're definitely going to see cheaper interest rates.
Shubir, what do you expect the RBI to do? Do you expect quick monetary action coming in?
No, I agree with Lata that I think the recognition now is that, you know, you've done a lot in terms of increasing liquidity in the system, but that liquidity is simply not getting passed on to where it would do the most good, which is into the hands of consumers, into the hands of companies who borrow for legitimate consumption and investment decisions or actions. That is getting passed into parked in treasury bills and in government securities and the reverse repo window. And, you know, the money is being used for something, obviously, but it's not being used for things that will help the economy to recover. So I think the emphasis on the monetary front, and obviously we're seeing similar kinds of reorientations of monetary policy in countries which have brought interest rates down to zero, the US and Japan. They talk of quantitative easing, but that's a different way of saying, look, we've gone as far as we can go on interest rates. We've got to find ways of getting more money flowing through the system. Our challenge in that sense is similar, that as much liquidity as there is in the system, unless a much greater percentage of it flows into productive channels, the impact of further rate cuts by the RBI is going to be limited. So there's no point in using up their ammunition to do something which may not have effect now and run out of it when there is a prospect that it will be more effective a little bit in the future. So I think it's now a situation of maybe minor cuts to sort of send a signal that the policy is still in motion, but much